The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. Good to be back in my chair. Thankfully, back from Hurricane Ian, lost some power for a bit. Sending out my thoughts to all those in Florida. And now as it approaches South Carolina, stay safe out there, folks. It is no joke, man. Some of those winds. I'm inland about Lakeland, Bartow, Florida. I think we got maybe category 1 almost hurricane winds, and still, folks, walking around the neighborhood yesterday, I'm talking about shingles off everywhere. Our soffit on our roof has some damage on it. We could hear things flapping around at night. It hit us about Wednesday midnight into 2 a.m. was the peak. We woke up Thursday. Things had pretty much subsided. Power was still out. Got power out basically late in the day yesterday. Cleaned up the yard a bit. Now we're sending our thoughts out to those people in Florida. And boy, some of the visuals coming out of Fort Myers, Sanibel Island. It's a tough one, man. The place just destroyed from the storm surge that came in. And you know what, folks? Keeping in mind, that could have been any of us in Florida on the coast, man. It was just a luck of the draw where that thing rolled onto land, And pretty remarkable. Some of the visuals coming out, send our thoughts out. But boy, if you are in the path of any of these storms, folks, please be safe. I was thinking about it earlier, talking about, the forecasters, right, are trying to portray to everybody along the coast, because the cone is so large when these hurricanes roll in, the danger and the evacuations necessary. And the problem is that it's such a finite area that the damage is usually the worst, right? The storm surge is so rough, especially when you're dealing with a coastline like Florida's, okay, that area where it actually rolls in, where the storm surge actually is the highest, boy, there is just complete devastation. And many times people will not want to evacuate because the storm can shift so often, right? We see it. Whether it's every single update you get from NOAA, there's a small shift. But realistically, you don't know where it's going to land, folks. And where it lands, you see those visuals in Fort Myers, man, in Sanibel Island, complete devastation. So be careful if you're anywhere in the coast. If you know anybody that's still in the path, South Carolina, I was seeing 3 to 6 feet. Man, Charleston, sending the thoughts out there. Hopefully nothing like what's happened in Fort Myers, because they have quite a rebuild that's going to take place. That could have been Clearwater Beach, folks. That could have been St. Pete Beach. That could have been downtown St. Pete. That could have been many areas in Florida. Just the luck of the draw is how that played out. Yeah, so stay safe out there, folks, and be thankful for what you have, because, boy, there were a lot of people waking up this morning with not what they had a couple days ago. Sad deal. All right, let's jump into the markets. You talk about some volatility, man. So I get power back yesterday, and I was watching the day, and it's kind of a serene deal going on where life had stopped to exist here in Florida, folks. You know, you're preserving life, right? You're getting through your house surviving, you surviving, your family, your kids, okay? So Wednesday, we're all getting ready. The market's ratcheting it up, okay? We allowed employees to get out of the office. I'm trying to forget. Days just fly, man. This week's been a blur, to put it lightly. But what was happening yesterday was I'm out there making sure the house is okay, right? We're looking at everything. We're going to have to get some roofers out, looking at the neighborhood. In the neighborhood, man, we got a lot of houses that have shingles off the roof. Now, no roofs ripped off or anything like that, okay? But there's going to be a lot of roof work that's going to be necessary, and I'm going to jump into that and how that may complicate the issue going on with Florida insurance market. But it was interesting to see the market cascading, man, yesterday with everything going on. We wake up this morning, you're still in pretty dicey territory, man. We got some economic data out this morning, but we jump right into it. You have the S&Ps right now. We'll call them flat, folks. They're negative 2 points, but we've been jumping around. We got some PCE data this morning, but you have the markets, folks, up to 36.93. The S&Ps have traded off more than 1% from where it was just about 4 hours ago. Volatility not over in any way in this market, man. NASDAQ 100, we're down about 20 points this morning, almost flat, but you've lost almost 150 points from where you were overnight. The Dow, 29,230. We had a 28,000 handle on Wednesday in the Dow. Dow negative by 55 and the Russell negative by just 1 point. Bitcoin, 19,185. Bitcoin, not as much volatility as some of the market action, considering you got crude back near $80 right now. Crude trading at 80.24. Gold contract catches a bid Wednesday, and actually continues that bid on yesterday with everything going on. We got gold up $3 to 16.71. And how about notes and bonds, man? You talk about a rally on Wednesday. Whew. You sell off Tuesday. On Wednesday, 110.22, up more than 2 full points. You give it back in the early session. But look at this, right? Interesting that you got the 10-year sitting basically where we finished on Wednesday in terms of near the highs. Meanwhile, you had the market sell-off and the bonds not quite trading in confluence with the market there. And we jump over to the VIX. You talk about some action, man. Volatility index still sitting at 22, okay? Well off the highs of 34.88 coming into Wednesday. Now, interesting, with the sell-off we got yesterday, right? 33 capping out the VIX on the volatility, not up to the 35 level that we saw when the market was selling off late Tuesday coming into Wednesday morning. All right, let's jump around to some of the currencies. Whoops, DXY. We'll start it off with the dollar index. You talk about a pullback, man. From 114 down to 111.50. We catch a little bit of a rise this morning. We're back up to 112.50. Folks, these moves, not normal at all. 1 full point, a move in the dollar index, let alone you give up 3 points, you get back 1 point. Pretty remarkable. We put this thing on a longer-term basis, right? Let's put it on a daily for a little bit more clarity. Folks, all you're doing is trading up to the upper boundary line of the trend line that it's been in basically since the beginning of the year. Now, where does the bottom part of this trend line begin? Whoops, excuse me. Let's just add a simple line here. And this is going to be a deal where, you know, it could be something like this, right? And this is where it is an art, not a science, folks. You know, you could say it's a science if you want to take the linear regression of all those in terms of where they line up in particular. The line's probably a little bit higher than that. Maybe that's a fair representation, okay? Wherever it lines up, you can see that we could have a little bit of a pullback here and still just be testing the bottom portion of this trend line to the upside. You're talking about trading off of the March 31st lows. You're talking about trading off the beginning of June. You're talking about trading off the beginning of August. You're talking about trading off the middle of September from where we kind of skyrocketed from 107 up to 114. You back off a bit, we could back off all the way to 109, maybe 110, depending on how long it takes to get to that area. And you're still talking about a bull market in the dollar index. We jump over to the euro. Euro-US dollar right now. Little bit of a bid. And look at where we're talking. So I have a Fibonacci number on here, okay? And I got a trend line in terms of where we are. A 382 bounce of the move we've had, folks, would still get you to about 103. And that would just be a 382 bounce of the move that we've been in since February. So yeah, bounces are possible. Now, taking off the Fibonacci number for a little bit of clarity here. Euro-US dollar, pretty well-defined channel line that we've been in. Don't make it quite to the bottom portion of that. We make it to the top portion. You're talking about maybe near 99, maybe near a dollar parity for the Euro-US dollar. We jump to the pound-US dollar in its own deal. Pound-US dollar actually broke out of that channel line, okay? What'd you do? You break out of it, you come back, you basically test that channel line. Could be an ominous sign, okay, of things to come, man, because if that is a test of that channel line to then break lower, watch out, folks, in a big way. Yeah. Currency action all over the place. We'll talk a little bit of inflation when we come back. We got some data out this morning. We'll take a look at Nike as well. Stay tuned, folks. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps negative by 3. All the markets slip into the red right now in the last 15 minutes. You had them barely in the green as we came into the start of the show, and we've had them slip slightly into the red. NASDAQ 100 negative by 24 right now. Dow off by 45, and we're in some dicey territory, man, in terms of you take a look at this thing on a daily basis, right? You talk about testing the lows, breaking those lows, and where do we go to next, man? 36.51 right now in the S&Ps. You got to back things up a little bit further to see the run that we've had, man. Seems like 3,500 to 3,250, that consolidation area you chopped around in late 2020. You could also make the run to where we were prior to that. That would be the next stop. Not sure where you should stop, at that price level, folks, but I'm talking about a run there. Let's take a look at the Fibonacci numbers, okay? That's the 50% number in terms of 34.83. And what's absolutely remarkable here is, you know where the 618 is? The 618 is right at the beginning of 2020, folks, okay? Not outlandish when you think about where we were coming into 2019 and so forth. If you remember, do you remember the December sell-off? I think it was Christmas Eve, right? You had a market that traded in September at almost 3,000. And just like that, folks, we were at 2,300. That was a 700-point give up from where we were, okay, entering the year 2019. You come into 2020 at 3,200. Okay, so even from 2018, we entered 2018 at about 26.75. You trade up to 32.50 over 2 years. With a pandemic, wouldn't be outlandish just to be thankful, maybe to be sitting where you were coming into 2020 after quite the gain. You back things up even further for some reference, and I've talked about it before, folks. Okay, there's November of 2016 when President Trump was elected, okay? Many people thought the economy was firing on all cylinders at that time. Now, we have fast forwarded 6 years from then, okay? The economy should see a dramatic rise over 6 years over that time. But I bring it into fruition because 2,200, everybody was euphoric over where the market and the economy was. We're sitting at 36.50 right now. 3,200 from 2,200 6 years ago. Not outlandish in any way, folks, to see that happen. So we will see what happens. Now, let's jump into some inflation data this morning, because that is all the rage right now, folks. The Fed's preferred gauge shows inflation accelerated even more than expected in August. Not what Chairman Powell wants to hear this morning, I'm sure. Stronger than expected despite what the Fed is doing. The PCE price index, excluding food and energy, rose 6% for the month after being flat in July. That was faster than the 0.5 estimate the market was looking for. On a year-over-year basis, the core was up 4.9%. The market was looking for 4.7. If you include gas and energy, the headline number increased 0.3%, compared with a decline of 0.1% in July. It rose even with the sharp decline in gas prices that took the cost of the pump well below $5 where it was, okay? And the Fed generally favors the PCE as the broadest indicator of where prices are heading in as it adjusts for consumer behavior. Yeah. And then they surmise it at the end here. If you look at either core or the headline, inflation running well above the central bank's 2% long-run target. I would say to the least, folks. That is quite a dramatic number. It seems like we just keep fast-forwarding month by month, and the data isn't catching up, right? It was supposed to be, let the Fed do its job, let the market react to what the Fed is doing. They will be able to tame inflation. It's possible, and it doesn't seem like it's playing out exactly how they would have liked it so far, folks, as you have numbers exceedingly, right, exceedingly beating the expectations for inflation. Not what you're looking for, man, as we continue the hiking cycle for the Fed so far. All right, with that in mind, we jump to Bank of America, and what do they say? Tactically bearish until the Fed intervenes. Yeah, they're saying they're tactically bearish, man, until the Fed decides to start cutting to save the economy. I think we're a little ways away from that, folks, to put it lightly. Yeah, well, they talk about, of course, multiple technical support levels broken. You have the 200-week moving average, the 14,000 mark, as well as the 2018 and the 2020 highs. Now, accumulated losses could be forcing funds to sell more assets to raise cash, accelerating the sell-off is what Bank of America is talking about there. And these are the levels they're talking about. And we got a lot of technicians out there, man, and you better keep them on your radar, because you break through the 2020 high, you break through the 2018 high, okay, and this is the New York comp, okay? I mean, where's the next point on this chart that you're kind of pulling back to, man? I mean, you have quite a consolidation maybe that's built up around with lows, maybe around 12,000 and change in terms of where you'd be. But boy, that is a far cry from where we're at still right now. Markets stop panicking when central banks start panicking. They expect the S&P to drop to 3333, not far off from that 3,200 number that I was talking about earlier, forcing a policy panic possibly around the G20 meeting in November. So we got about 2 months, man, 2 months. Whoo! Equity rally after that, but says the U.S. market won't touch a big low until after the first quarter of next year, when a recession and credit shock will lead to a peak in yields, dollar, and the Fed's hawkishness. Boy, if we got to wait till the end, until the first quarter, okay, they don't say the end, the first quarter of next year. Yeah, I mean, end of year right now, right? We're expecting the Fed's going to go 75 basis points, then they're going to go 50, maybe they'll go 25 in the beginning of next year, and then maybe they'll trail off, okay? But that's a far cry from where we are right now, man. And the market might squirm quite a bit until we get to that level. Yeah, and so they're talking about 3 different price levels here, okay? 3,600, maybe you could begin to quote-unquote nibble. 3,300, you could take a bite, and 300, you could gorge, is what they put at. 3,000, man. 3,000. We pull back 20% from right now, man. That is going to be quite a head shaker. But yeah, we got inflation that's got a big problem, man, and it's not going anywhere right now, to put it lightly. One of the other articles out here I was reading, Fed Vice Chair, I mean, listen to these words, folks, okay? Warns against retreating from inflation fight prematurely. I would agree, okay? If you're not, let's just say you were unaware of stock market prices right now. As many people are not in America, okay? Unemployment rate, what's it, 3.6, 3.7%, right? We just got initial unemployment claims yesterday. Very low number. I think we're under 200,000, right? What was that number? Very low number in terms of initial unemployment claims. If you're not watching the stock market, okay, the Fed's mandates are price stability and full employment. Man, we are at full employment, folks. Okay, we got big problems in the economy going on. I agree with that. But unemployment at 3.6%, man, we are at full employment right now. The only thing on their schedule should be taming inflation that is generationally out of control right now. Okay, monetary policy will need to be restrictive for some time to have confidence that inflation is moving back to target. For these reasons, we are committed to avoiding pulling back prematurely. Right? Yeah, so take that for what it's worth, man. You got the core PCE out here running 0.6% for the month, higher than the market was looking for. You have the Fed vice chair saying we got to make sure that we're restrictive for longer to make sure we tame inflation. We have inflation numbers continuing to run hot, and we have a pretty healthy unemployment number right now in the economy. You line those all up, man. I mean, what happens, folks, if we go 75 and we go 50 to end the year, which is their projection right now, and we're still getting these types of numbers in November and December? It's possible, man. So what happens? You better be prepared for it. Stay tuned, folks. We got markets accelerating lower. We'll be back for the open.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, Welcome back, folks. We got markets open right now, and you're looking at a market in negative territory, dicey action as we come into the lows of the session, and we had the market. I mean, we just gave up more than 50. Yeah, what are we doing? We're dropping, 50 points. We are off of the highs from where we were this morning, 36.93 down to approaching 36.46 right now, and that's right where you spiked to on that PCE number this morning at 8:30. Also kind of where you were overnight at about midnight Eastern time. NASDAQ 100, you talk about a sell-off yesterday, man. You give up 500 points from where you were at the end of the day Wednesday towards the end of the day on Thursday, and we're right now at 11,200, about 100 points off of that high. You had Nike out there, man. Talk about some news. Tough deal on Nike. They are trading lower in a big way from 96 down to 82. You're off 12.8% on their numbers, man. They got too much inventory is one of their problems right now. You put this thing on a 3-year weekly, you're talking about coming into the COVID lows, folks. Remarkable. Didn't think that was possible. You commit to COVID at 100, you go up to 179, and you are back to $83 on Nike. It's been a one-way shot, man, from November of last year, and we're approaching October. You're in an 11-month slide to downward territory on Nike. Pretty remarkable, man. All right, what else do we got up here? Let's talk a little bit about Russia, because without everything else going on, this would definitely be the main story in the morning, man, as Putin pushing ahead with the UN's announced land grab. He was making a speech out there, said on Friday that he's going to sign accession documents formalizing Russia's annexation of 4 occupied regions of Ukraine as Kyiv, backed by the U.S. and its allies, pushes efforts to recapture lost territory, just making it tougher and tougher to see a way out of this is really the problem there, folks. Not sure how that happens in any way, but they're talking about grabbing more annexed areas in the Ukraine. You look at where they are. There's the Ukraine. You have Russian advances in terms of the light. I wish they used a little different colors. The pink one here is the Russian-occupied Ukrainian territory, okay? And then you got the blue area is where the Ukrainians are pushing counter-offenses. You can see it's a decent area that they have bordering Russia. Crimea, of course, where they annexed many years back, but nonetheless, geopolitical tensions ratcheting up over in Russia and Ukraine does not seem to be getting better, and that's putting it lightly. All right, we jump over to Facebook. Meta. They're going to cut headcount for the first time, slash budgets across teams. Will end 2023 as a somewhat smaller organization, is what they're talking about here. First major budget cut since the founding of Facebook in 2004. They're going to freeze hiring, restructure some teams, trim expenses, and realign priorities. Going to be smaller in 2023 than it was this year, is what he's talking about. Probably necessary with what's going on with the market, folks, with what's going on with the economy. I had hoped the economy would have clearly stabilized by now, but from what we're seeing, it doesn't yet seem like it has. So we want to plan somewhat conservatively. A Meta spokesman declined to comment. That was Zuckerberg in terms of what he was saying there. Meta stock, fell further on the news, down 3.78. Jump over, man. Okay. You talk about a pullback, man. This puts Nike to shame in terms of the pullback. 384 to 138 this morning. You're catching a little bit of a bid. You're up 1.4% this morning. You put it on a 15-minute. There's your volatility on Facebook Meta. You back it up on a 5-year weekly. Let's back it up even further. Let's back it up all the way. You are talking about trading at 2016 prices. 2016. Now, what's remarkable here, right, is that, remember I kept bringing up the S&P? I know where it was because I've talked about it. That's basically the election of Trump in November of 2016. S&P was sitting at 2,200. It's at 3,200 right now, okay? Facebook obviously did not deserve the acceleration it had out of COVID, okay? From 154 up to 384. You give back all of that plus some. You come into basically the bottom of COVID, okay? Bottom of COVID is 137.10. We just traded below that today. Remarkable. The low of the 2018, you're talking about 123.02. But you are back to 2016 prices, folks. So if you don't think it can happen, look at some of these stocks, man. Okay, because Facebook's not going anywhere. They're going to be around. Okay, they have Facebook, they have Instagram, they have WhatsApp, they have Oculus Quest, virtual reality. They are not going anywhere, man. The multiples, the advertising that they're dealing with, right? The targeting that's a little bit more difficult with Apple and the privacy that they're dealing with. Of course, very difficult. But you're talking about 6 years of stagnation. Maybe that's not the best word with inflation we're dealing with, but 6 years of flat prices for Facebook, Meta, back to 137. If you're looking to get into it, I'm not sure where that begins to fall, folks, but they are not going anywhere. They're going to be around, okay? Billions of people use Facebook a day, let alone Instagram, which is in its own right worth a tremendous amount of money. I mean, the dicey part is you talk about the value. You are now at a market cap of $370 billion for Facebook. Yes, that is quite a number, okay? But if you segmented off a business like Instagram by itself, I mean, in some speculations, folks, you're talking about 100 billion, 200 billion, say big numbers. Instagram itself, WhatsApp, just absolutely a phenomenal company, okay? There is value in this company, $370 billion. There's still a long way to go down, potentially, if they're talking about the economy having a problem. And you know what gets hit in an economy first, folks? If people got to trim a budget, you know what gets hit? Advertising dollars. Quickest thing you can do to save some money if you need to in an economy that's struggling. Potentially, that's what's been hitting Facebook so hard, along with many other things. The one thing I will say, though, is that when Facebook started taking a lot of grief, okay, about their plans to go into AI, to go into the metaverse, etc., one of the biggest worries is that they were going to take all the profits they had and use that money into developing that. And it is good to see that they are at least willing to pare things down to keep up with an economy that has pared itself down as well. But boy, you talk about a pullback, man. Let's jump over to Nike and see how that pullback shakes up. Yeah, I mean, look at the difference, right? Nike's gotten decimated as well, but look where it is compared to where it was in 2016, man. Nike's still up 60% from where it was in 2016. Yeah, you had a pullback. You're still up, 30% from where you were in 2015 in Nike. Facebook's an animal of its own, the way that thing is pulled back, man. All right, let's jump into some of the FANG stocks as this market trades lower with the S&Ps now down 20 points. Let's see how Amazon is trading, off 1.2% right now. Amazon at 113.45. We jump over to the big dog, Apple, 41.36. Speaking of advertising, Google basically off about 0.3% so far this morning. Let's see how Tesla's trading this morning, off about 1.3% as well. We jump over to some of the growth stocks. ARK off about 0.3% as well this morning. Zoom. Look at that, Zoom catching a little bit of a bid, up about 0.6. You talk about demise, man. That's a 3-year weekly, basically a straight shot for 2 years, folks, to lower prices. Yeah, you got quite a bounce in there in the middle of last year, but things from $400 down to $75 in the span of just over a year. You put this back on a year daily, I mean, maybe this thing has found a bid here, okay? Now, this is a daily, but you can see we've had some severe market volatility recently. Okay, and you have basically Zoom chopping around the $75 area. Maybe it's found a little bit of a bid, of a floor, I should say, as Zoom, a $22 billion company, but they do make money, folks. Okay, they do make money. The market knows they're not growing to the degree that they were at one point. And you talk about getting into it. Right now, they got a PE of 24. Not outlandish when you talk about a company that makes money. And you're trading at $75, far off at almost 600 it was trading at. Stay tuned, folks. We'll be coming back. We'll talk a little bit of insurance in Florida. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the fund is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps right now, negative by 13 points. NASDAQ 100, negative by 38. We got all the markets teetering right near the lows right now. You're talking about NASDAQ 100 within about 120 points of the low that we had back on June 17th. We got the S&Ps right now just at that low almost. That low is 36.39, folks. We're trading at 36.39, right in that area, man. You talk about the Dow below that level. The Dow's low back then was 29,639. You're 500 points below that price level. And the Russell within about 2 or 3% of that acceleration level as well. All right, talking a little bit of Florida insurance, man. You're going to hear a lot of talk about it right now, folks, unfortunately, because that was the first major hurricane to roll into Florida since 2018, I guess. And like I said, man, you see the devastation in Fort Myers, man, Sanibel. Send some thoughts out to those people, man. That could have been any of us in Florida, folks. That could have been Clearwater Beach. That could have been St. Pete Beach. Just complete devastation in many neighborhoods. But to understand it briefly, for those outside of the state or maybe those in the state that just don't understand why their insurance is going up so fast. All right, I got a bunch of articles pulled up here, and I'm going to give you a quick summation, okay, of how this works in terms of why the insurance is such a problem in Florida right now. Now, here is one statistic that'll start things off with, okay? Florida allows plaintiff lawyers to be awarded 2 to 2.5 times their usual hourly rate for property insurance lawsuits. Now, I believe they had a special session. I'm not sure if they solved this one, but things are still in big trouble. What's going on, folks? Because we're going to get into whether it's Citizens, which is basically the last insurer of last resort, which is basically Florida's insurance company that is insuring their citizens. Okay, there you go, Citizens, is on the hook for almost 1 million policies right now. And what happens is that if Florida loses money on those claims, they don't just bill the people that are Citizens customers. They put a tax on every Florida resident out there. So this is in interest of every single Floridian out there. What is so absurd, though, is it all comes back to basically insurance fraud and lawyer fraud. So please call me, folks, if they've passed anything, all right? If you have anything to add, I'd love to add to this conversation, 877-927-6648. Here's a number for you. Property insurers in Florida paid out $15 billion in claims costs between 2013 and 2020. How much of that money actually went to the consumers filing those property claims? 8%. 71% went to the lawyers filing those claims. But here's the kicker, okay? And it doesn't include in this part, okay? Where the other 21% go? Because what? 8% goes to the consumers, 71% goes to the lawyers. Folks, that's the lawyers that are fighting for the consumers, okay? Those are the lawyers that are lining up for the property claims that are abusing the system. The other 21% goes to the lawyers for the insurance companies. So you got 8% going to consumers, and you got 92% of claims money going to lawyers. And why does this continue to happen? Because many elected officials are lawyers themselves that take money from lawyers to run for office. It's so sad, folks, okay? So that is a big part of it. Now, where does this come from? Okay, this comes from the fact that Florida allows plaintiffs' lawyers to be awarded 2 to 2.5 times their usual hourly rate for property insurance lawsuits. What happens there is you have the insurance company, okay, that if they don't settle, what's going to happen is it allows the lawyers to charge a multiplier fee, is what they call it, okay? And the multiplier fee basically incentivizes the insurance company to settle, because why go to battle with the plaintiff's lawyers if you know that you're going to get slammed with a multiplier fee? It just makes sense to settle at a higher rate, okay? Florida has 9% of the country's property claims. Now, this article, folks, is a Post article from May of this year, okay? So I know that they were trying to, in the middle of all of DeSantis' culture war phenomenon, okay, call a special session. You are going to be hearing a lot more about this, folks, okay? My insurance bill, I was talking about it. It is staggering numbers, okay? People are worried about gas prices. If you're in Florida and you own a home in any degree, your insurance number is going to be through the roof, man. And this is just going to exacerbate things now that we have a hurricane that's rolled across the state, causing many problems, to say the least. Now, here's how it happens, right? It's roofing claims. Now, the reason why I bring this up, man, as I just told you, I walked around my neighborhood alone, folks, out in the middle of Florida. Many, many roofs have shingles ripped off it, okay? It's almost an opportunity for these roofers to exercise the scam that they're running. Now, the way it works is roofing companies almost literally come and knock on your door, okay? And the way it works is if a roof is 25% damaged, that's when Florida coverage kicks in. They can wrangle you a free roof from your insurance company, even if the storm wasn't the cause. All the homeowner needs to do is sign off on allowing the roofing contractors to collect directly from the insurance company. So what does that do? That has corrupt roofers overcharging companies for a roof that is needlessly replaced, okay? And then what happens? Roofers pocket the extra money, homeowners get a new roof, and then there's the litigation claim that goes with it on top of things. It's a staggering problem, folks, and it's of our own design. You know, there are many states that face the issues that we have in the panhandle, even more so than Florida sometimes, right? I mean, what about, you know, Louisiana, man? What about Alabama? What about, you know, just many of those states up there on the panhandle that just get battered, okay, by some of these storms? They're not dealing with this, folks. It is a problem of design by our legislature. So DeSantis, he's like, you know, been crowned in the Republican Party. I hope they get this under control, folks, because it is a huge problem, to say the least. And we're going to see how this plays out right now with another storm rolling in. And that was it. Florida lawmakers scrambled to fix a property insurance crisis before hurricane season. Well, guess what? Now we know the hurricane has come. We got clobbered, folks. And there's a few places, especially in our state, that are going to need some real money to rebuild what's happening. 8 insurance companies operating in Florida have gone out of business since 2021, including 3 in the past 3 months. Now, this article was written in May, I believe. May, okay? We're seeing it happen all the time, folks. You're not seeing it in Florida, but you are. Those that remain have sought rate increases ranging from 15 to 96%. And yeah, they're going to be selective. Sometimes, folks, it's difficult to even get a policy if your roof is 15 years old. Folks, roofs that are 15 years old are fine, okay? Yeah, they might not be as perfect as a brand new roof, but they won't insure them because of the scams that are going on in the state where you have a roof that is susceptible, right, to maybe a roofer and company comes in, tells you need a new roof, tells you there's some damage, it's 15 years old, and guess what? What do? They have lawyers that come in, they sue the insurance company, they charge the fee multiplier, and they threaten to do that. The insurance company settles, and the entire state of Florida pays for it. Now, citizens, okay? Citizens, Now, this one is from September, so this is talking about, this is a recent one, okay? This article is a recent one talking about the storm itself and how it could cripple the insurance industry that is already teetering right now, okay? Hurricane Ian will test the financial preparedness of some insurers to cover losses to their portfolios, in particular smaller Florida carriers with high exposure. And that usually deals with 75% of their policies in Florida. Talk a little bit more about this as we wrap it up, folks. But Citizens has gone from 700,000 to more than 1 million just in the past year. Talk a little bit more, folks. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps climbing back to flat right now. Market saves itself a little bit, bouncing around near the lows of yesterday. S&Ps at 3653. NASDAQ 100 climbing back into the positive by about 8 points. Going to be a volatile day, I will say. So they're talking about in the den, folks, and they had asked, what does insurance, let's say, cost for a 2,000 square foot average home in your area? Here's what I'll tell you, folks. I have a duplex in Tampa that's about 1,600 square feet. Okay, it's two sides, 2 bedroom, 1 bath on each side, about 800 square foot apartment. Right? It's in a single-family residential area, okay? It's grandfathered in, so you can't build duplexes in that area anymore. So essentially, it's a 1,600-square-foot home with 4 bedrooms, 2 baths is how you could encapsulate it. I thought it was 7,200. right? I just pulled it up, folks. $7,336. $7,336. I just got that bill. Okay, it's due October 16th. That is what is going on right now before we had a hurricane roll into the state. Okay, now what happens is that is for a company called Security First, which still exists in Florida. I am going to seek out other rates, folks, and I'm going to seek out Citizens, which my dad has said through his experience with many properties is by far the best one right now. For individual consumers, that is what I would suggest, going off my dad's advice, okay? But here's the problem for Florida, folks, is that we're self-insuring. What happened to Republicans talking about business going on? We're allowing insurance companies to just run from the state, and we're going to self-insure everybody. And who's going to get hurt, folks? The citizens of Florida are going to get hurt, okay? Because what's going to happen is that if this goes BK and we can't provide for the amount of claims that you get, when Citizens now has, I think, over 1 million customers in the state of Florida, up from like 300,000, right? Every citizen in Florida gets taxed for that. And yeah, as they're saying, that's $600 a month for insurance. Folks, you're going to be hearing about it, man. I know DeSantis has big plans. He better get this one under control if he has national plans at all, because this one's going to haunt him, man. Because people, like you say, living on fixed income, man, if I paid off my mortgage, folks, I would still have a bill for taxes and insurance over $1,000 a month. So much for paying off your house. Great to be back, folks. Stay tuned. We got our man Basil Chapman. He is up next. Wild day in the markets, as usual. Have a great Friday and weekend, everybody.